welcome back to another YouTube video by Shao King. Well, today I'm going back to the traditional Forex trading strategies that I normally used to do for you guys, and today I'm going to teach you guys a very good Forex trading strategy. This is called the Stochastic Divergence plus Supply and Demand strategy, and in this strategy I am going to teach you how to spot divergence both by looking at the trend and analyzing your stochastic oscillator. The first thing you'd like to do is to set up your stochastic oscillator with the correct settings. So get started. First things first, you go to your indicators button, this one up here. Once you're in the indicator button, you make sure that you select on the main chart the plus icon here that looks like an F. Once you have selected that icon, you will have various indicators popping up. You see you have your trend indicators and then you have your oscillators. Remember that we are looking for oscillators. Click on the stochastic oscillator. As you can see, our previous stochastic oscillator parameters were for the other strategy, the beta matrix strategy, but this time around we are going to switch the settings so that it can be for our specific stochastic divergence strategy. So for the stochastic divergence strategy, the first thing you'd like to change is the K period. You see percentage K period here? This is what you change. So we change the 15 and it becomes 5, okay? Change the 15 to 5. Once you have done that, you move on to the next. And then we have the percentage D period. Okay, you change the percentage D period to 3 and remember to maintain the slowing at 3, okay? Keep the settings as they are. If you wish to change the colors, you can change the colors, but for this example, we are not going to change the colors. So guys, this is part 1 of the stochastic divergence strategy. The part 1 involves conducting a thorough settings change, okay? Okay, so now you can see that our stochastic oscillator has been set accordingly, and now all we have to do is to make sure that we find divergence. Okay, we need to find divergence in order for us to trade, okay, or in order for us to use our strategy. So first you switch to the 1 hour time frame. Okay, once you are on the 1 hour time frame, all you have to do is you have to select the pair that you're going to trade. For this example, I'm going to use BTC USD for. So now by spotting the divergence, okay, this you have to look at this carefully, okay guys. Let me see if I can change this a bit. Yes, so like this. Okay, so the first thing you'd want to look for is how does the BTC USD look like on, technically. So technically speaking, BTC USD looks like it's going to sell, right? So BTC USD looks like it's going to sell. How do we know this? We know this by doing this. If you do this and draw your trend line, you see that BTC is in a very good 4 touches downtrend, okay, on the 1 hour. Okay, so we have BTC coming from a support. Okay, BTC is coming from a support, which is here. Okay, so BTC is coming from around here, and now we have BTC heading over to a order block. Okay, so this is BTC. Okay, now in order for us to say that this is going to be a successful trade, we need to spot divergence. And as you can see, down here, okay, down here we have the same thing. Okay, so on the chart on top, on the 1 hour, you are able to see that price looks like it's going to drop, but then on the stochastic oscillator you see that price is coming from an uptrend on the stochastic oscillator because it has like 3 touches which did not break the lows. Okay, by this, what do I mean? So let me just use this indicator so that I can this object so that I can illustrate to you what I mean. So if you look here, okay, so rectangular too. Okay, so if you look here, this is touch number 1, and then if you look here, this is touch number 2, and once again this is touch number 4. Okay, I mean number 3. So we have 3 touches right there. Now if you come to the stochastic oscillator, you have the same thing. Touch number 1, touch number 2, okay, and then it's obvious where touch number 3 is, right? And there you have touch number 3. So that is your divergence. Now what do? You have 3 options. Okay, so option number 1 is you either enter at market execution right there, or you enter with pending orders. Okay, this price went up. Okay, price went up, and then price came down here, and then price went up again, and then price went down. Okay, and then lastly price went up again. Okay, but as you can see, price kept on breaking the lows that it created previously with this. Okay, so it broke structure here and then came all the way down here, but did not, and then it went up here, but it didn't break this low here. Okay, it didn't break the previous low right there. Okay, so if you look at that, you have a clear indication that price might not break the high here. Okay, so price might not break this. If price doesn't break this one, okay, if price doesn't break this, what happens is that price then is obeying the current market structure. We will keep selling BTC. Okay, the confirmation is here on the stochastic oscillator at the bottom. Okay, your confirmation is right here. This is where your confirmation is. Confirmation is here because it created divergence. When there's divergence in the market, you have a clear indication that price might respect the current forming structure. Okay, so you might see Bitcoin falling and maybe trying to break this structure during the weekend. If it doesn't, then your stop loss should be somewhere here. Okay, stop losses will be there. Okay, so this is the perfect place to set your stop loss. I'm going to erase everything so that I conduct a thorough technical analysis that you're going to follow. Okay, but since price is already reacting, I'll just put my sell position on Bitcoin. This is a very small account, so I'll just put this. Okay, while I place that, I'm also going to delete the indicator settings here quickly. I mean the drawings. I've deleted my drawings. I've sold BTC. What I have to do now is just this. Okay, so this is where I would place my pending orders. Let me just quickly place some pending orders. One here, we take profit down here. Okay, my stop loss for this order is going to be right here. Okay, right here. Okay, it's either right here or right here, depends on you. Okay, but mine for this trade is here, because if it breaks this, it's going up, so I don't expect to hold it any further. So it's right there, and then I have another pending order at the 50% of that. So I'll place my pending order here. Sell limit should be here, right there. Stop loss again right here. Okay, so as you can see, the higher the pending order, the smaller the stop loss. Okay, which means I can increase my lot size. So now I'll just place my sell limit, activate. My sell limit is activated. You see the orders are open. Okay, buy limit, sell limit. Now I have to go and place my last order. Okay, My last order will be big, because in case price activates it, let me just increase my lot size to 0.10. Stop loss 0.10 is here. My stop loss is just here. Same place, okay? Take profit right there. Okay, sell limit orders all set. Now I just wait. Okay, so all my sell limit orders have been placed. As you can see, I am trading according to this. And you know, when there's divergence, price starts behaving well. Okay, price behaves well. You don't have to fight, you don't have to struggle. See this one. Okay, okay, okay. Let me even add some positions. Let's go. Okay, so this is divergence for you guys. I hope you enjoyed the video. Please like and subscribe to the channel in order for you to learn more. I'll be posting more videos like this just to help you guys understand how the markets work. This is just a little strategy that can help an individual trader who's struggling to find entries on the higher time frames or on the 1 hour. Look for divergence. Most of the times it works. Okay, by the time I started talking to you guys, this was where price was. Okay, price was somewhere here, right? But as you can see, price is already declining, and what we expect is for price, if the moment price closes below our rectangle, you know, if price doesn't break this rectangle, it just has to keep on dropping and possibly come all the way down here. So enjoy